the video, and today I'm going to speak about two things. Number one is what is a currency or forex correlation, and then the second thing is what it is that you need to look out for if you do want to join a signal group in the future as well. So if you are looking to sign up for signals and all of that stuff, I'll tell you exactly what it is that you need to look out for. So I had a question from someone who sent me a screenshot on my Instagram and asked me what do I think about the group that he was in. So the group, they basically had a buy for NZD USD, and there was a sell on Euro USD. Now some people might go, okay, but how does that work? So, and I just want to get it up here for you guys to see. So basically, so basically what happened was the person or the signal provider said they needed to buy NZD USD and they had to sell Euro USD. Now, the thing about this is that sometimes it can work, sometimes it doesn't work at all. Now, there's only one way that this can work. Now, before we continue, it's important to understand that what a currency correlation is, and I'll tell you exactly where you go and look for pairs that correlates well with one another, and you'll also understand what I'm saying is going to make a lot of sense after I've explained it to you. But a currency correlation is basically a positive or negative relationship between two separate currency pairs. A positive correlation means that two currencies move in the same direction, and a negative correlation basically means that they move in the opposite direction there as well. So a positive correlation means that they both move to the upside, or if the one goes up, the next one goes up. Then a negative correlation means excuse me, that means that if the one goes down, sorry, let me repeat that once again. A positive correlation means that two currency pairs move in tandem, and a negative correlation means that they move in the opposite direction. Okay, they move when there's a negative correlation, it means that they move in the opposite direction there as well. Now, the easiest way or the most easiest way to understand that basically is to look at this forex correlation. Sorry. Now, the reason why I want to go through this with you guys, and this is basically on my FX book market correlation there, so there's nothing fancy there. But what I do want to speak about this while the Euro stock is plummeting on the left because they had the Bank of England decided to hike interest rates today, and it's just a bloodbath for the stock market. So you can watch that there, and I'll explain this here. So basically, there's nothing wrong with buying NZD USD and selling Euro USD. The problem normally starts is when there's fundamental data that is released for either currency that you're trading against. Now, let's say for instance, right, there's news coming through for the dollar index. Okay, now if you're buying the one and you're selling the one, so let's say for instance you're saying that NZD is gonna increase in value, it's gonna be stronger against the dollar, and here you're saying that excuse me, here you're saying that the euro is gonna get weaker against the US dollar. So let's say there's positive news coming out because this is the you're trading two different currencies against one currency. So basically what happens here is if there's a high impact news coming out for this currency and that news is positive, what that means is this currency is going to be stronger than this one, so this one is gonna dump. Okay, this one on the other hand, so because basically when you buy NZD against USD, you're saying that NZD is going to get stronger against the US dollar. But when the fundamental data comes out and it's good for the dollar, this NZD buy is gonna go down. So that means you will be in a loss in this one. But in this one, you will be in a win because the euro is going to get stronger against the US dollar. Now, remember, there's another scenario that we have over here. Now, let's say the fundamental data comes out and then there's news for NZD and there's news for USD at the same time. The news comes out that the USD is going to increase in strength, right? And the NZD comes out also positive. It's also going to increase in strength. the market isn't going to be that aggressive in terms of the move to the upside. You might see some consolidation take place because it's quite difficult for investors to decide which way they want to move the market. However, the Euro USD pair will still continue to move to the downside. Now, the reason why it's important to know correlation is because you don't want to trade pairs that are negatively correlated with one another at the same time, because if the one's running in a loss, the other one's also going to run in a loss there as well. And you can use this website as a further reference or a confluence. So how this basically works is, here you've got the base, I'm not going to say the base currency, but let's say I'm going to go with something very easy. Let's go with Euro USD. So here you got Euro USD. Now here it basically means that the correlation between the two of them is 83.2%. So what this means is that there's a 83.2% that when the Euro USD goes up, AUD CAD is going to go up as well. Now the higher the correlation, so okay, that's Euro USD, so it's 100%. That makes sense. So the higher the correlation, you got GBP USD as well. They've got a very positive correlation, but that's basically because you're trading both currencies against the dollar index as well. And you can see this basically with every pair there. GBP USD, if you look at Euro USD, they're 91.1. If you look at USD CHF, you'll probably see somewhere, USD CAD, USD CAD over there, we have GBP USD's got a negative correlation because it's GBP USD and not USD GBP. Here we got USD CHF, and if you look at USD CAD over here, USD CAD has got a very high correlation, and as well as USD JPY, as the way GBP USD has got a negative correlation, and that's basically because you're looking at the base currency over here is basically set on the opposite side for the one, and it's on the negative file. It's on the other side for the other one. So basically what that means is here you can see it's GBP against USD. There it's USD against the CAD. So the easiest way to read this is basically when you look at pairs like Euro USD, GBP USD, AUD USD, all of these pairs basically has got a higher it's got a higher chance of moving in the same direction because you are trading all currencies, but you're all trading all currencies against one major index there on the other side as well. You can see here AUD USD has got a 91.9% correlation with Euro USD and a 94.7 correlation with GBP USD. Now it's for that reasons that you do not want to buy and sell. So you can't go and say, sell NZD USD and then buy Euro USD, because it's not going to work. Then you can even say based off the correlation table, if you look at Euro USD there, and where's NZD? Okay, let's go to NZD USD, and you look at the Euro USD. Yeah, they've got a 90% correlation. There's a 90% chance that both of them are going to move in the same direction. So imagine you sell this and you buy the other one, but they are both tend to move in the same direction because you're trading both of them against the dollar. So whoever the guy is that has sent you guys the signal, this should be punched in the face. Now the next thing I do want to discuss is what is the kind of things that you can look out for when you do get yourself stuck in a signal services provider. Now I myself do provide signals as well for the FXC Connect, and for those of you that has been or is in the FXC Connect channel, you're more than happy to come out here and tell me, or even just be a witness for me as well. But I've got a very high success rate in terms of my signals that I send. I'm not here to sell anyone signals. I'm just here to educate you guys. I don't invite anybody. But what I do want to say is that if you ever do want to join a signal, or if you are currently in a signal group, there's a couple of things that you need to look out for. A couple of things that you need to stay away from. Then I'll explain everything to you guys as we move along. As well. Now, let me see my keyboard here. So the first thing you want to stay away from is, is people who has got a low risk to reward. Now I'm gonna type all of this out and then we can go through them. People that trade before high impact news, right? The third one would be people who say TP open, SL open also. The fourth one is, or the third one would be people who send a signal, for instance, Euro USD, and they say this is a high risk trade, take at own risk. I mean, I paid you to make sure that the risk is reduced. Take at own risk. And then the last thing I do want to speak about is you. Yes, you. And your poor risk management. Now, there's always two sides to a story, so I'm not just going to blame signal providers, because some of the people are actually good. People just don't know how to manage their risk at the end of the day, and that is what we are going to be speaking about. That is what we are going to cover. Okay, that is what we're going to cover. Firstly, excuse me. Basically, if you do join a signal group and the risk reward's quite low, what that basically means is that they 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 are willing to risk more than what they are going to win. Okay, so let's say, for instance, if they do send a signal to say sell Euro USD, what you want to do basically is you want to put in the stop loss and the take profit, and basically you want to calculate to see what your risk to reward is. So for instance, this is a risk to reward tool. So let's say they said sell the German 30 index, and they said sell it at 1.4482, take profit at 1.12204, stop loss at 1.16761. Then all you do is you put in that numbers in the risk reward tool, and you'll be able to see over here. You ultimately want to stay away from a 1-to-1. You do, however, want to be with people that does trade a 1-to-2 risk to reward, because what that means is you're risking 1% to make a 2%. So that's number one. You want to stay away from people that's got a low risk to reward. Okay, and then secondly, people that trades before high impact news. Now those are the people, I call them gamblers. Now those are the people that normally set a buy stop and a sell stop before fundamental data gets released, because they know before high impact news are released, the market tends to consolidate due to uncertainty from investors waiting for the data to come out before making a decision in which way they want to take the market. What these type of people do is they put a buy stop over there and they put a sell stop over here, expecting the market to go to basically spike up, and then what they do is guys close, or they put a sell stop there, and that when the market does go down, then they say guys close, and they go on Instagram and they say that guys, we just killed the NFP, or we just killed the FOMC. You can't kill it. It's not dead, you know. And your 20 pips that you caught there, that trust me, my friend, it doesn't mean you're probably still in arrears for all the losses you've had. So let's continue. So you want to stay away from people that does this, because why? What you'll find is you'll find a candle like this. Okay. Now this happens most of the time. Now if you've been trading throughout the FOMC yesterday, you'll see gold made a candle like this. Okay. Now this candle is normally formed where the market is stuck within a consolidation when the news comes out. Now you have to remember, these guys can see exactly where your positions are in the market. The retail trader positions are. So what happens is they spike the market up, activate your stop loss, come back, activate your buy stop, come back, hit your stop loss, go down, activate those sell stop, come back and hit your stop loss. Then the market goes boom. Thank you so much to all the clowns for all the money. So you want to stay away from people that says we killed the Nasdaq, we killed the NFP, because you can't kill the NFP, my friends. It's unfortunate that you think that way. Now the next thing is people that trades TP open and SL open. These are the kind of people that would send you a signal and say, guys, there's no TP, there's no SL, close when you're happy with your profits. There's a reason why people pay other people for signals. It's because those people need to make sure that whatever risk is associated with the trade is thoroughly calculated, and the data provided, or the reasoning behind the trade has got sufficient data to back up the reason for why you want to make a trading decision, for why you want to sell Euro USD, why you want to do that. You can't come to me and say SL open, TP open, because it might be easier for you to TP open and SL open because you're trading a demo account. But for me, it's not easy. Like, where is SL open? Like, is SL open 1 million pips down or 2 million pips to the upside? Where is SL open? Where is TP open? Like, where is TP open? Is like TP open 10 pips? You have to stay away from people that does this as well. And before we continue, if you're new to the channel, a sub would be appreciated, as I provide valuable educational content on a daily basis. And if you enjoy the video, please hit the like button for the YouTube algorithm as well. Next up, we've got the guys from Euro USD, the people that says this is a high risk trade, take at your own risk. People that says this just works so much on my nerves, because why? Trading in general carries a very high risk. You don't need to tell me that taking this trade is going to be a high risk for me, because you saying that to me ultimately puts me in a position to go like, okay, but I don't think I should take this trade. I don't think I want to take this trade. Maybe I shouldn't take the trade. It just puts you in a position where you think, okay, I don't want to take this trade basically. Because you shouldn't be sending out signals that carries a high risk in the first place, my friends. Like, you shouldn't be doing that in the first place there as well. So next up, we are going to be speaking about the individual itself. Now, when I talk about poor risk management from the person who takes the trade, okay, which is normally, it's almost like the interest rate decision we had yesterday, which I also forecasted 100%, and I was very, very, very pleased with the outcome on that as well. So you have to make sure that you calculate your risk all the time. Also, make sure that when you take a trade, you can't go with aggressive lot sizes thinking that you're going to become an overnight millionaire. It's important to understand that the market is always going to be there, and you need to make sure that you calculate your risk before you take any trade in the market. You have to make sure that you calculate your trade. Remember, a signal provider can send 10 signals for the week, right? And all of that can be at a 1 to 3 risk to reward. Okay, risking 1% to make 3%. Now, let's assume that 6 of the trades, or you took 5 trades, right? You took 5 trades that you lost. Remember, you only won 3 trades at a 3%, meaning that you have won 9%. So you should have been in profit, okay? But according to your calculation, your lot size that you were supposed to use was a 0.03. So you went ahead and you used 0.03 for the first 2 trades. And then what happened was you got into your feelings, you started feeling a certain type of way. And then what happened was known as revenge trading. So now you go and you take a bigger lot size, which is a 0.10. Then you lose again. So now your entire risk to reward is skewed, and because you have lost money, you want to go back to a 0.03, okay? Because of that, even if you're up 9% for the week, even while everyone's making money, you will be in a loss. That's why, because you're greedy. There's no other reason for that. Now, that is important when you join a signal group there as well. Now, guys, that is it from my side. I want to say thank you so much to all of you for the support on the channel. And don't forget, if you want to know more about correlation, you can come and check out this website on my FX book. Thank you for your time. And as always, cheers for years.